Hi everyone, thank you for joining. We'll be starting in about 1 minute. All right, I think we're good to start now. Assalamualaikum and greetings everyone. Thank you very much for joining us today for our first ever session on Sharia-compliant equity crowdfunding. My name is Aina and I'm the head of legal and compliance at pitchIN. And with me today is Alpha, who is from the product development team at Masref. So we are very happy to have you here where we will be explaining to you on the basic details of Sharia-compliant equity crowdfunding and how companies can actually raise funds in a Sharia-compliant manner. So before we begin the session, we'd like to start with an introduction on pitchIN and as well as Masref. So pitchIN started in 2012 as a reward crowdfunding platform, and we obtained our equity crowdfunding license in 2015. And since then, we've obtained a secondary market platform license, an initial exchange offering license, and now we have the approval from the SC to offer Sharia-compliant equity crowdfunding. So we aim to be the alternative digital investments hub in Malaysia and also globally. So Alpha, can you also introduce Masref to the audience?
Yep, sure. Thank you, Aina, for the introduction. And also, hello everyone. Good afternoon. My name is Alpha. I'm one of the Sharia product development team at Masref Advisory. So, talking about Masref Advisory, we are a Sharia advisory and consultancy firm. We specialize in structuring products for Islamic banking and finance sector. And we are actually run by ex-bankers. Our co-founders have more than 50 years experience doing Islamic banking in the Islamic banking industry basically. And we've worked with a few fintech players. One of them is, of course, pitchIN. The fintech players include P and ECF players who are registered under Securities Commission RMO license, right? So we have started working with pitchIN on this Sharia-compliant ECF platform, I believe, since end of 2020. And thankfully, we got approval from SC end of June this year, I believe, right now.
Yep, correct. All right, thank you, Alpha. So before we start the session, we just want to inform the audience that please feel free to ask any questions that you like by typing in the question in the Q&A column, or if you're tuning in through Facebook, you just type in the comment section and we will get to them at the end of the whole slot, right? So we will first start with an initial understanding of ECF for those who are not really familiar or just need a refresher. ECF, or equity crowdfunding, is how companies raise funds from the public in return for equity or shares, right? So pitchIN, as a licensed ECF platform operator under the Securities Commission, we provide a platform for companies to host their ECF campaigns, because ECF runs on a campaign basis, right? So there will be a start date and an end date for the offer of shares to the public. So ECF itself is a regulated activity, which means that pitchIN and also ECF itself will follow the guidelines that have been set by the Securities Commission. So if you've heard of P2P before, peer-to-peer lending, we are actually operating under the same heading. It's just that for P2P, it's debt-based, but for ECF, it's equity or shares-based, right? So just also an overview of what ECF is in the industry. It's not actually a new way to fundraise. It's been around for about 7 to 8 years already. pitchIN is actually Malaysia's leading ECF platform, over 10 platforms, right? So there's a total of 10 platforms in Malaysia. We've raised over 240 million for over 140 issuers and counting, right? So that's the number of companies that have successfully raised as part of our portfolio. So we are now actually one of the 2 ECF platforms that have received approval to offer Sharia-compliant ECF to the public. The other one being Etis. So like Alpha said earlier, we received approval in June 2022. Our focus has always been to make Sharia-compliant investments and fundraising more accessible to investors and issuers, because we believe that in terms of alternative fundraising methods, this is not something that is widely available. So we hope that by bringing Sharia ECF to the investors and the issuers, they will be able to raise funds and invest with confidence. Right? If you do decide to fundraise through pitchIN to do Sharia-compliant ECF, you can actually expect very thorough guidance from the pitchIN team, because we will be there to support you in terms of setting up your campaign, in understanding the requirements for a Sharia-compliant deal to be hosted, etc. So before we start with the requirements, we will actually invite Alpha to explain to us on the basic understanding of Islamic finance, because we believe that in order for the issuers themselves to be able to craft a very investable equity crowdfunding deal that is also compliant, they need to be able to understand the Sharia principles behind their campaign, right? So before we start on these 2 main components of Sharia ECF, I would like to invite Alpha to actually explain to us on Islamic finance.
Okay, thank you, Aina. So before we skip to the good part that Aina mentioned, right? Let me just bore you a little bit on what is actually Islamic finance. So we are talking about when pitchIN is offering a Sharia-compliant ECF, pitchIN Sharia-compliant platform itself eventually falls under Islamic finance umbrella. So the first thing that I want to talk about is what is actually Islamic finance. So as you can see on the screen, Islamic finance is a comprehensive financial system that adheres to Islamic jurisprudence, and it refers to the financial market transaction, operations, services that complies with Islamic rules, principle, and code of practice. So in another way, it is a financial system which is guided by some law, which we call a Sharia law. It's guided by these Sharia rules and principles. So what is Sharia? Sharia is actually referring to Islamic law, which sources are taken from 1, the Holy Book of Quran, and 2nd, the saying or acts of our Prophet, we term it as hadith. And since there are many contemporary issues arising since the inception of we are also currently relying on another source in Sharia, which is source number 3, consensus of Islamic scholars. So we have guidance from Quran, our holy book, the hadith, and consensus of scholars. So the next slide on the prohibition in Islamic finance. When we are saying that we practice Islamic finance, we must ensure that these 5 elements are not present in our daily operation. So the first one is riba or interest. You might have heard it largely discussed within the Islamic banking area. It is actually a prohibited element in all Islamic finance transaction, the transactional, in our transactions, everyday transactions. So what is riba or interest? It is defined as any unjustifiable gains on top of something. So the simplest way we can see riba is when you give out money as a loan and you charge an amount on top of the principal without having any justification. And that is tantamount to interest. Another element that should not be present is oral or uncertainty. So to be certain on our, we have to be certain on every aspect of our transaction. We must be clear on all the terms that we are agreeing to when we enter into a transaction. So the third one, there should not be any gambling elements where you just rely on luck. If there's increase in price, you gain. If not, you lose. Without the ability to know why you gain and why you lose. The fourth and fifth one is you cannot be involved in any non-halal activities that is not approved by Sharia. And also you cannot be involved in any immoral activities. So for the non-halal activities, it's not only restricted to non-halal as in the foods and beverages, right? It's also any activities that is deemed non-Sharia compliant by Sharia, and Securities Commission and Bank Negara also have their own guidelines on what type of business activities that is considered as Sharia non-compliant. So why we have Islamic finance here, and we have why we are promoting it. So you might be thinking, when there is Islamic name associated to something such as Islamic finance, that it is exclusively for Muslim, but it is absolutely not the case for Islamic finance. This segment and I believe most of the values associated with Sharia, the Islamic values, is meant as a guidance, and it may be followed by everyone. So I believe this segment is Islamic finance. Islamic finance can cater for all segments in our society, regardless of what our religion is. The second one is Islamic finance is in line with the government's aspiration to bring Malaysia as one of the Islamic financial hub in the world, and we are seeing our Islamic finance sector, particularly the assets, is growing year by year. The third one is the social and value-based intermediation practices, which the Sharia law itself brings to our society. And the last one I would like to bring is Islamic finance would have a bigger market associated with, because this is related to what I mentioned in the first point, where Islamic finance is actually for everyone in the segment. Correct. So we are going to touch a bit on the Sharia contract applicable, particularly for pitchIN offering, pitchIN Sharia compliant offering. So we have two Sharia contract that we'll touch today. The first one being the Musyarakah, and the second one is the Wakalah. So what is Musyarakah? Musyarakah is a partnership agreement where you have a capital provider, and then you have the entrepreneur, and the entrepreneur is operating business on themselves. So Musyarakah is basically when you share capital, you share expertise, and you also share the profit and loss from the partnership. It is in a simple word, it is a partnership contract. So Musyarakah, you'll find it in pitchIN offering of ordinary shares. So Aina haven't touched on it yet, but pitchIN will be offering ordinary shares and also preference shares, right? So the issuer can either issue ordinary shares or preference shares. So when the issuer is issuing ordinary shares, the Sharia contract or the the contracts between these two parties will be based on musyarakah. The next one is wakalah. Wakalah is basically an agency contract where there is two parties. The first one acts as a principal, which authorizes the other party as their agent to conduct a particular task. So it can be, this wakalah can be with or without fee. So this contract will be applicable for pitchIN's preference shares. So the issuer will act as a principal. Oh, sorry, the investor will act as a principal. And the investor will act as a principal while the issuer acts as an agent, and the issuer will perform particular tasks which the investor has assigned to. In this case, the issuer will have to conduct the business in which has been defined in the contract itself. The next one, we have the Shariah screening assessment tool. So if you're gonna ask, oh, how do we qualify as a Shariah compliant issuer, or how do we know that our company qualifies to be under pitchIN Shariah compliant platform, right? So we have few screening assessment that is guided by Securities Commission Shariah Screening Assessment Toolkit. This Shariah Screening Assessment Toolkit is issued specifically for unlisted micro SMEs. So the first step is we screen your business activities. If you pass the business activities I mentioned earlier, there are some business activities that is considered non-Shariah compliant. So if you pass this first step on the business activities, so we will move to the next step where we screen your financials. So there are some financial ratio, there are some threshold where you have to meet. So let's say the threshold is currently 33%. So if your income, your Shariah non-compliant income in the company is more than 33%, so you will fail the assessment. And if it's lesser than 33%, you pass the assessment and be considered as a Shariah compliant company. So this is the next slide is the negative list that the negative that I mentioned. This is the types of business activities that is considered Shariah non-compliant. So you cannot be involved, for you to be qualified to issue investment note under pitchIN Shariah compliant platform. You cannot be involved in this kind of activities. The next one is on rectification and purification. This is particularly applicable for the investors. If you are an investor that has, let's say the issuer has passed the Shariah assessment, the Shariah screening assessment, and has issued an investment note, but come next year, pitchIN do another assessment and the issuer is found to be non-Shariah compliant. So what the investor has to do? So the first one is investor will be advised to dispose the Shariah non-compliant shares. However, the investor may hold the shares until the investment cost is retrieved from the dividend payment. And after dividend is received, after you have retrieved investment cost, any dividend received after the date that the shares is being declared as Shariah non-compliant should be maybe purified by channeling it to any charitable bodies. The next one is the key characteristic of Shariah-compliant shares. So just to recap, for the issuer to claim that the issuer qualified as a to issue Shariah-compliant investment note under pitchIN, the main thing that we look at is the business activity itself. Your business activity should be Shariah-compliant. The utilization of proceeds is also for Shariah-compliant purposes. So it links to the when your business activities is already Shariah-compliant, I believe the use of proceeds should Shariah-compliant purposes. And this Shariah-compliant shares is based on risk sharing, where you will have no capital and dividend guarantee. All the returns, the returns would be based on actual performance of the business itself. So that's the beauty of us doing equity-based financing. So speaking on the preference shares itself, the preference shares allowed under Shariah is basically all types of preference shares except the cumulative preference shares. So as long as the preference shares is non-cumulative, we can move forward and see whether the other aspect of that preference shares is Shariah compliant. And the last one I'd like to touch is on the redemption. So under Shariah compliant shares, the redemption would be based on current price of shares, but of course, protecting the interest of the investor, we will have some underlying mechanisms that we can explore later, the investors and issuers can explore later with pitchIN. I believe that's all from me, right, Nina?
Yep, thank you, Alpha. So before we proceed with the actual process flow for a Shariah ECF campaign to run, let me just recap what Alpha has shared in these two main components, right? So Alpha has explained how an issuer or a company can be considered a compliant issuer, whereby the issuer has to meet the benchmarks that have been specified by the SC in their Shariah assessment toolkit, right? So if the issuer does not meet these benchmarks, then the issuer will not be able to offer Shariah ECF. Only then, after this has been confirmed, can the issuer proceed to prepare or structure a compliant deal. So like Alpha has also explained, a compliant deal will follow the principles such as, for example, there should be no capital or dividend guarantee. The dividend must not be cumulative and all that. So these are the two main components that we have to remember if you want to do Shariah ECF. So I will also move on to the next item in today's session, which is the flow of an ECF campaign. So for those who are not yet onboarded with us or not familiar with how pitchIN works, this is the basic flow of an ECF campaign from the moment the company applies to us until the ECF campaign is actually live on the platform. So we have the application process where the company would apply to do ECF. And once we've screened through the company and see if it's suitable or not for ECF, we onboard them where they have to submit the relevant documents and fill up the necessary forms. And then we will do due diligence on them. So our role as a platform operator is to ensure that the company and the people behind the company has been verified and then they are actually investable for the purpose of ECF, right? So this will cover financial due diligence and also legal due diligence. And concurrently, as we are preparing all this, the company can start preparing for the ECF campaign itself. You can start with preparing the campaign pages, the marketing materials like videos or any social media campaigns. And they will also start preparing the legal agreements that will be signed or entered into between the company and also the investors. And once all this is done, the company will actually go through an internal approval process at pitchIN. And if pitchIN approves this company to go live, i.e. hosted on the platform, then they will be put live. So that covers the pre-fundraising, right? So we also want to touch a little bit into what happens after ECF. So if the campaign is successful, meaning it has managed to raise its minimum target, then there will be a post-fundraising process whereby pitchIN will help the company to complete the share allotment process for investors and sign all the relevant agreements. And the long-term obligation of the issuer would be that they have to continuously report to investors to update them on their financial and business performance. And they also have to fulfill any investment terms that they have promised during the campaign. So for example, it will be a rate of dividend at a yearly basis and all that. So to compare this to Shariah ECF, we have this flow here, right? So during the application process, when you apply to pitchIN, we will actually have a conversation with you and check whether or not on the initial basis, whether or not you are eligible for Shariah ECF. So we'll call this the initial Shariah screening, where we ask you a few questions and see some of your financial documents to see if you have exceeded the benchmarks that Alpha has explained earlier. Onboarding will follow the same process of a regular ECF campaign. And then at the due diligence stage, concurrently with due diligence, there will be a Shariah screening process where we will actually confirm whether or not you are eligible for Shariah ECF. So in the event that you are not eligible, you can still proceed with regular ECF. But if you are eligible, then you will be able to prepare Shariah-compliant documentation that we have ready. That means that your legal agreements will already need to follow the guidelines for Shariah ECF that we have agreed on and structured with the SC. And then once all that is done at the approval process, if all is as per our requirements, you will actually obtain our Shariah approval, which means that on the platform, your campaign will be labeled as a Shariah ECF campaign, right? And then to also compare between Shariah ECF and regular ECF at the post-fundraising stage, it will actually follow the same processes, except that there will be Shariah periodic reviews. This is because Shariah ECF is a long-term commitment by an issuer. If an issuer has agreed to do Shariah ECF, they have to maintain their Shariah-compliant status for as long as the shares are being held by the investors, right? So that means that if you are Shariah-compliant during the ECF campaign, you have to ensure that you are not doing anything that may jeopardize your Shariah-compliant status in the coming years, right? So that would mean maybe you would need to not do certain business activities, or you need to ensure that you still do not exceed the financial ratios and all that. So pitchIN, as the platform operator, we have a duty to investors to confirm every year that you are actually still Shariah compliant. And the way we do that is we do periodic reviews on you, and we release a list of Shariah compliant issuers on our platform so that investors will be able to check if the companies that they've invested in are still compliant. But regardless of that list, if let's say an investor is holding shares that are no longer compliant, they will be the first to be notified if that happens, right? So just to recap, the differences between Shariah ECF and regular ECF, like Alpha mentioned earlier, for regular ECF, you can actually raise funds for any purpose that you've specified in your campaign. But for Shariah ECF, you will need to raise funds for a Shariah compliant purpose. So that probably means that if you are planning to expand into a non-compliant activity, that would not be an acceptable purpose for Shariah ECF. In terms of benchmarks, there are no benchmarks for regular ECF, but there will be benchmarks if you would want to be considered as a compliant issuer. And then as for the investment terms, for regular ECF, you are free to decide your own terms. Similarly to Shariah ECF, you can still decide what you want to offer to the investors, but the terms must still follow Shariah principles that have been outlined earlier by Alpha. Right. So that is all that we will talk about in this session, but we already have a few questions from the audience today. Alpha, I'll just go through them and read them out loud, and then we can answer them together. Right, so the first question from Akwam is, what are the applicable regulations for Islamic ECF? Maybe I can start with the answer, which is for Islamic ECF, first and foremost, the applicable regulation would still be the guidelines for recognized markets under the SC. So that is the guidelines that covers ECF. So whether it is the regular ECF or the Islamic ECF, pitchIN would still be governed by that guidelines, right? Alpha, do you have anything to add?
I just want to add that on top of the formal regulation for the license itself, Islamic offering, whether it is peer-to-peer financing or equity crowdfunding, it's also subject to Sharia resolutions. So the Sharia resolutions is issued by Securities Commission, or either we follow the Securities Commission resolution from Securities Commission or Bank Negara. They are issued and approved by their own Sharia committee. So basically, when we do this Islamic offering, we have to send it to Securities Commission for approval. And for Islamic offering, they particularly have to go through the Islamic Capital Market Department at SC to get the approval. So that's basically the extra regulation for Islamic ECF.
Right. So I'll just add to that, where that's why pitchIN has actually obtained approval on 2 investment structures, right? So firstly, there will be the ordinary shares offering and the preferred shares offering. So we do have templates that issuers can use or adopt for their own ECF campaign. And if, let's say, the issuer follows this without any material changes, right, then there's no requirement to actually obtain approval from the SC, further approval from the SC. But if the issuer wants to do something that is a bit, that is substantially different from what has already been approved by the SC, that's where the further approval is required, right, Alpha? All right, so moving on to the next question from Chang Ting Cheong. Mashraf is playing a role of a Sharia advisory or Sharia product developer. So actually, Mashraf is pitchIN's Sharia advisor, but they were also consulted when we developed the Sharia ECF offering, and we actually worked very closely with them when we submitted our application to the SC. Anything to add, Alpha?
No, I agree with you. So in Mashraf itself, so I presented myself earlier as Sharia product development executive, right? So we basically assist our client in developing the product itself, but we also offer, we do not stop at that product development stage. Just at the product development stage, we move forward to get the product approved by, we have our own Sharia committee, so we get the product itself approved by our Sharia committee. So we are basically doing both. We are acting in both roles. We also develop we give the requirement, the product requirement of what is Sharia compliant, what is not, and we get them approved.
Thanks, Alpha. So next question from can you have today's slides? Yep, actually you can re-access this session by going to pitchIN's Facebook page, and you will be able to watch the session from start to finish, and you'll be able to find the slides there. All right. From Chang Ting Cheong again, who are the Sharia advisors in the Sharia Council? So I'm not sure which Sharia Council that you're referring to, because there are 3 different councils, right, Alpha? There will be Mashraf's Sharia Committee, right? The SC's Sharia Advisory Council, and also the Bank Negara Sharia Advisory Council, right?
So if you're referring to the SC and BNM, they have their own Sharia Advisory Council, and for us at Mashraf, we just have the Sharia Committee to approve that for approval of the product.
Yeah. So if you would like the exact advisors, maybe we can recommend that you look at BNM and SC's website, because the advisors will be listed there. And also for Mashraf, you can go to www.mashraf.com, and the Sharia advisors of Mashraf's Sharia Committee will be listed there, right?
Right.
Next question from Chika June. If I raise funds, I will need to go through this process via pitchIN. Yes, correct. If you wish to go through Sharia ECF, this is the exact process that you'll be going through. Sorry. From Chika June also, do you help us to find the funding? pitchIN itself has a registered a database of 14,000 registered investors, right? So that's a big number, but at the end of the day, we always remind our companies that they need to be proactive in marketing their campaigns to investors, because investors, they wish to hear from the issuers themselves to pitch to them, right? Why this investment is a good idea. So what we do is that we help increase visibility for your ECF campaign. So whether that be through email marketing or social media marketing, we help people find the ECF campaign. But that doesn't mean that the companies or the issuers themselves cannot host their own events or their own online sessions to pitch to the public. Okay, so I hope that answers the question. Does pitchIN also show how much is raised for a running campaign? This is to check how much is raised before investing. The answer is yes, if the campaign has gone live, right? So at pitchIN, we have 2 stages of the campaign, which is pre-live or live. So pre-live means that the company is still preparing for ECF, in the sense that they are ready to accept investments, but they may need more time to speak to certain select investors, or they need more time to prepare more marketing materials. So at that stage, the amount raised will not be visible, but for the live stage, any investor can see how much has been raised before they invest. So I hope that answers it. From Chika June, what are the advantages of hosting Sharia-compliant ECF? I can start on this answer first. What we've seen so far is that a lot of investors really want to invest in Sharia-compliant ECF for 2 reasons. So firstly is because of their own personal beliefs, right? For Muslims, they also wish to sort of purify their income by only investing in Sharia-compliant investments. And for them to do it in ECF, previously, there was only one other ECF platform. And now that we have entered the market, then there will be more investments to choose from. So that's one. The second reason would be that for Sharia-compliant ECF, the advantage that it has is that there is a true sharing of capital and risk and return, right? So in a way, you are really bolstering the entrepreneurship ecosystem, because the terms provided or offered under Shariah ECF is much more competitive, but at the same time, it is still there to protect investors' rights. So what I mean by that is that investors will be able to see clearly what they are going into in terms of the documentation, while at the same time it is still compliant, right? Alpha, do you have anything to add on that?
I just want to add to your first point, right? So by hosting Sharia compliant investment note in Islamic ECF, you might be able to tap into a bigger segment. You might have a larger investor coming in to invest in your investment note that's having more fun for your business, right?
Yep. Thank you, Alpha. The next question is from Ashraf. Salam. I did an investment via pitchIN in early 2021. Can I know how the share status for this situation is and what do I need to do? So this is a very good question, Ashraf, because you're basically asking if past issuers are actually Sharia compliant. And our answer to that is that it really depends, because firstly, based on our approval from SC, an issuer can only be declared as Sharia compliant if they follow the exact procedure that we've just explained, right? So this issuer that you are referring to definitely did not, but that does not mean that they are not Sharia compliant, because it really depends on their business activities and also their financial ratios at this particular moment. So I guess to answer that, I would say it really depends on what they're doing now, but generally you can expect that only future issuers on pitchIN will be specifically labeled as Sharia compliant.
I guess Aina, for Ashraf, I guess he can also engage with pitchIN to really see whether his investment note is Sharia compliant or not. And if it is not, you'll have to purify any income that comes from that investment if you want to.
Right, yeah, definitely. You can always reach out to pitchIN and get further confirmation. Right. From August, can we know more about the financial ratio criteria to be Sharia compliant, and is profit margin one of the ratio? Alpha, can you take this?
Yeah, sure. So it's not the profit margin. So the financial ratio, we'll see, we have to benchmark. The first is we see your debt over total asset ratio, and that debt over total asset ratio should be less than 33%. And we'll also see the your placement in Sharia non-compliant, your Sharia non-compliant placement, like basically where you put your money, your income over total asset. So if your Sharia non-compliant debt over 33% and your Sharia non-compliant income is over, I believe it's 49%, so you'll be considered Sharia non-compliant. And if it is lesser than that threshold, 33% and 49%, you'll be considered as Sharia compliant.
All right. Next question from Anonymous. Is it possible if non-financial sectors are also applying for Sharia compliance, and how? So the answer to that would be definitely. As it's actually Sharia compliant, ECF is not restricted to issuers in the financial sector only, right? Because any sector is welcome to apply. It's just that the negative list would tell you whether or not you would be eligible, but even then it still depends on the ratio, right, Alpha?
Right. So this is basically another way for you to get funding or whatever segment you are in, whatever sector you are in, you can apply for this Sharia compliant status.
All right. We have a question from August again. We are a business selling business system and software. Seems like we pass all the industry limitations, but what if one of our clients is selling alcoholic drinks in the restaurant? We are selling the system to the restaurant. Alpha, would you like to take this?
Yeah, this is a quite part of a question, I would say, because we have to delve deeper into whether, so basically to answer it, we have to see how much of that income. So you are selling system to a client which sells alcohol, but we have to see whether the income coming from that Sharia activities. So basically your business activities, you pass that. So your selling system and software doesn't falls under that negative list, but the issue is now your income itself. So I don't think I can answer it like right here, right now. So yeah, that one we have to look deeper.
Yeah, so August, you can definitely reach out to us later, so that we'll be able to see if you can, meet the criteria. But in general, what Alpha is saying is that your business activity itself is okay because it doesn't fall under the negative list, but it's the income that you generate from selling to the restaurant that is part of the concern here, right?
Right. And also I would like to add into that Sharia screening, right? On top of the business screening and the financial screening, under SC we also have the what we call that, some kind of reputational screening. So like it's also depends on whether the Sharia committee would approve that kind of activities or not.
Right.
We have we call that
requirement, is it?
That requirement, that leniency, get approval from the Shariahs.
So that will mean that if let's say a particular business or income is very closely associated with a non-compliant matter, then it might also be something that prevents that company from doing Sharia ECF, right?
Right.
But that is also still a case-to-case basis. That's why we do not want to say that you cannot do Sharia ECF at this point of time. It always depends on your particular facts and situation. All right, moving on to the next one from Zaidi. Assalamualaikum. The periodic Sharia reviews will be done by pitchIN or Masref. So there will actually be a two-stage review, whereby the first layer will be done by pitchIN. So we will be the one to engage with the company to check on their Sharia compliance status. But Masref will actually be doing a compliance review on us, which means that Masref will be sort of auditing us to check if our review has been done correctly. And as a result of Masref's compliance review, Masref will also come up with a list of Sharia compliant issuers for the year. So that means that the ultimate confirmation will be released by Masref as a result of their review on us.
Right. Also, if let's say we found any Sharia non-compliance issuers or activities, we'll also be advising on how you can rectify, pitchIN can rectify that. And this would mean that we will indirectly advise how the business itself can be Sharia compliant one more time.
Yep. All right. Next question from CH Ong. Is there a difference in terms of ROI or equity that can be offered to investors between both conventional versus Sharia ECF? So I will just, I think, explain that in general, where in terms of the actual ROI, the value, right? Or for example, the percentage of dividends that you'd like to offer to investors, there's really no difference because that can be set by you. But there are certain principles in place. For example, in terms of dividends, for Shariah ECF, non-cumulative dividends is the way to go, right? Cumulative dividends is not allowed because that will mean that even though the company is not profitable for the year, the company has to actually give dividends to investors the next year, right? That's what cumulative means. And that is actually a guarantee of dividends, which is not allowed, right? Because if the company is not profitable for the year, under Shariah ECF, investors are supposed to share in that sort of loss. So they will not actually be guaranteed any income or dividend from the company. Right, Alpha?
Right, correct.
So other than that, there are also, of course, other specific principles which we can share in detail if you are applying to do Shariah ECF. Next question from Fakrul. Usually, how long does it take from application to the actual fundraising? So this is a very good question, Fakrul. It's a very popular question from our issuers. It actually really depends on from company to company, right? It varies because from onboarding to due diligence to campaign prep, it depends on the complexity of the company itself. The records of the company, whether you have all the necessary documents that you can submit to us for due diligence, and also in terms of the prep, whether you have the team to support you in preparing your ECF campaign, right? Because the marketing, the legal agreement, all that requires a lot of input from you. So if you have a team to support you, we would say that the timeline will be much faster. But generally, on average, it would take about 1 to 2 months in terms of preparation. But please do expect that it can be longer depending on what you want to do, right? So for example, the bigger your campaign, the more that you are trying to raise, could potentially be more time required. From Tika June, can Shariah-compliant ECF still apply for the government grant, and what is the ratio of investment? I think you are referring to MySafe, which is the Malaysian Co-Investment Fund. Yes, you can actually apply for MySafe even though you're doing Shariah ECF because it's still ECF. The ratio of investment is still the same, which is 4:1 for non-agricultural sectors and 2:1 for agricultural sectors. From Anonymous, does pitchIN have a sort of automation to identify and instantaneously shift the investment which is triggered to be non-compliant to a similar compliant issuer to avoid purification or disposal, or this has to get consent from the investor first? I can answer that, Alpha, and maybe you can add more later. But generally, the answer would be no. There is the purification or the rectification will not be that the investment is shifted or transferred to a compliant issuer because unlike platforms like robo-advisory platforms, when you invest in a company, your contract, whether it is the conventional one, your agreement contract, your investment agreement, or if it's the Shariah ECF, your wakala, your musyarakah, will be with the specific company itself, right? So that contract cannot just be shifted or transferred to a different company because that will just be a different party, right? But we do have mechanism in place to identify and notify investors if a non-compliant event has occurred, right? So what we do is that when we identify the non-compliant event, our first step is always to get the companies or the issuers themselves to rectify the situation. Right? It could be something that was not intentionally done. For example, they were not aware that they had accidentally breached the benchmarks or something like that. And our first step is always to get them to rectify. And once that's done, then that will not be considered. That will not be it will not be an issue anymore, because they will still be Sharia compliant. But if they are not able, or they're not willing to rectify the situation, then only we will start notifying the investors to ask what they want to do next, whether it's disposal or if they want to maintain their investments. So in a way, yes, consent will always be obtained from the investor before we do anything.
When the investor side, when you got the notification from pitchIN that your investment note is now considered Sharia non-compliant, it is up to you. We will provide advice on what you can do to make your income Sharia compliant. But it's up to you to do the purification itself.
Yeah, correct. So if, let's say, you are a non-Muslim investor who's holding Sharia compliant shares, then you are not in any way obligated to purify your income, right? Yep, I think that's all the questions we have. Please feel free to type in more questions, but we just like to touch on a few of our frequently asked questions. Let me share the screen again. So we have had a few questions from potential issuers or investors, and which we would just like to discuss the answers with together in this session, so that the audience will be able to understand. The first question was, my business has non-Muslim management and staff, can they still proceed? Can we still proceed with the Sharia compliant deal? And the answer is a resounding yes, because the Sharia screening is actually done on the business itself and not the people behind the business. So as long as the business is compliant, then you will be able to offer a Sharia compliant deal. The second question, what happens if my business does not pass the Sharia screening process? Afa, would you like to take that?
Yeah. So if your business does not pass the screening process, you can still offer, you can still do the offering under the conventional platform, which pitchIN still has to offer. But you absolutely cannot do it under the Islamic one. So what you can do, maybe if you need the funds urgently, if you need the issuance urgently, you can issue it first under the conventional, and then consult with pitchIN on how you can make your business Sharia compliant. If it does involve your main business activities, I believe that is something we can work around.
Yeah. So meaning it's always a possibility if you're willing to take the steps to change your business or your financial ratios to Sharia compliant, right?
Right.
Yeah. So the third question is, will offering a Sharia compliant deal incur additional fees for the issuer compared to regular ECF? And the answer is yes, there is a small additional fee that will be incurred for the Sharia screening itself. So moving on to the investor side, who can invest in a Sharia compliant deal? Alpha?
So basically, anyone, like we mentioned earlier, we touched earlier in the slides, right? Islamic finance is for everyone. So everyone can invest in this Sharia compliant deal. Doesn't really matter if you're Muslim or not. So you can still, for the issue itself, you can still get funding from non-Muslims. And for non-Muslim and Muslim, you can still invest in this Sharia compliant investment.
Yeah, because it's open. It's like Alpha said earlier, Islamic finance is open to all, right? The second question is, how do I know if the companies remain Sharia compliant after I have invested? So like we explained earlier, as a result of our Sharia periodic reviews, we will confirm the status of each company on a yearly basis. So you'll be able to access that list on the pitchIN platform, and if there is a non-compliant issuer, you will be notified definitely. And the final question, how do I know which companies are Sharia compliant? So an issuer that is Sharia compliant, that has gone through all the processes that we discussed before, will be specifically labeled as a Sharia compliant issuer. So you'll be able to see that clearly before you invest. All right, I think that's all the questions we have for this session, right? So before we end, we'd just like to tell you that if you are interested to raise funds through Sharia ECF, or if you want to know more about investing in Sharia ECF deals, please feel free to email us at sharia@pitchin.my or visit our website at www.equity.pitchin.my. For Mashrif?
For Mashrif, you can reach us out at info@mashrif.com or our website www.mashrif.com.
Thank you, Alpha. So if there's nothing else
before
for us,
before we end, I saw the two of the attendees are raising their hands. Maybe you want to take that?
I think we can. Would the two attendees want to type in your questions in the Q&A column?
I think they're not hearing.
Okay, all right. So don't worry if there's if there's anything that you guys would like to ask, definitely feel free to reach out to us via email, or you can also go to our pitchIN Facebook page and ask your question in the comment section, and we'll get to them once this session ends. And also, if there's any question that you'd like us to pass to Mashrif, feel free to just put it there also, and we'll make sure Mashrif gets them, right? So that's it. Thank you very, very much for joining us in today's session and for participating and asking all these questions. We will definitely take all this into consideration when we prepare our materials for Sharia ECF, so that it's more clear and understandable for both issuers and investors, right? So thank you, Alpha, for joining me and for your presentation. Yeah, so please feel free to follow pitchIN's and Mashrif's updates on LinkedIn, on social media, and we hope to bring you more of these sessions in the future. Assalamualaikum and stay safe. Bye.